looking at the entire thing, obviously in the perspective of what happened last time in comparison to what's happening this time. And I'm talking about the breakout of the 50-day moving average versus the breakout of the continuation of the $1,900 breakout.
Mhm.
You had a lot of similarities coming into the breakouts from a just a price action perspective. Trend and pattern were vastly different though. So in your trend and your pattern coming into gold, you did have all of those support levels building. And so when you have all of those support levels building, it does give you a little bit more confidence in that position from a price appreciation perspective. And so when you're looking at that breakout of 1900, you had multiple pivots coming up, you had a clean trigger at 1900, you had the economic condition behind it that supported it. The breakout was legit, and I still maintain the breakout was legit. When we saw resistance form at a very similar level, 1950 by 1960, we saw that slowing momentum candle, and then on the downward movement in price, I said, okay, at this point, we're looking at that $1,900 level, and 1900 is that level that really needs to hold from the short-term perspective. Now, 1900 obviously did not hold, right? Now, when we're looking at this, honestly, when I see price movements like this on gold, which you don't see a lot. You don't see this type of price movement on gold a lot, especially when you couple it into the last, couple days. Gold doesn't move like this historically. When you look at that, you got to look at causations. What happened in the marketplace to spiral this out of control? Because it is now out of control to the downside here today. It really has not had any buying in any capacity, and so when you're looking at it from yesterday, you got your bounce at 1900 on yesterday. Obviously, I said yesterday that this is what you want to see. You want to see that slowing momentum. And you know what, Tim? I will say that on every breakout retest of support throughout
Mhm.
my entire career. I will say that. You want to see slowing momentum as support. You want to see that upward movement in price. We didn't get it. Now let's look at the intraday analysis to understand why we did not get it. And guys, I had a hunt today to find some of what was happening in the gold market, because the overriding theme out there over the last 3 days is, oh, interest rates are going up. That's causing a little bit of dollar appreciation. Dollar appreciation is driving gold down. Well, I'm looking at that, and yes, interest rates are creeping up a little bit, but there isn't a singular moment in time where interest rates saw a driving movement in price. And when you look at what's happening on gold in comparison to the dollar had no movement in the same time frames that gold had its movement. And so the next thing you got to look at is, okay, when did those banks open? Because gold's a 24-hour tradable instrument, guys. It's not a US based product, it's a world commodity. And so you got to look at those time frames of when economic reports are released and when banks are opened. And the number one time frame at 1900, when we saw that volatility start to move, was it was the British Open, not the British Open, but the Bank of London Open, right there at 3 a.m. Eastern Standard Time, right around 1 a.m. our time. What you also coupled that with was some positive reactions in the European markets to some German industrial production data, which, in my opinion, was a nothing burger. Those industrial production German reports, they were only for November, saw a slight uptick, which is given away from a production with the increase in COVID in Europe over the last month. What you're really seeing here is a technical event. Once it triggered underneath 1900, stop losses came in play, and that created a volatile condition coming into the cash open of the US, where the cash open of the US continued following in the direction of the European Open, and it just has not been able to find a support level since. Algorithms have taken over to a certain extent, and now we're back into that discussion long term of the 200-day moving average.